we've just recently had some changes announced by CMHC. They're one of the insurers. Can you let our listeners know about what those changes look like right now? What exactly are they?
Hey, Ricky. So there's three main changes that come into effect July 1st. So we do have a few weeks, where we can get our clients into the market before these changes come into effect. So the three main changes, the first one is that CMHC is eliminating borrowed down payment for anyone who's purchasing with less than 20% down payment. So it may not affect a ton of people, but I don't know if you remember last time we were in your office, we did a presentation about a loan product that we do for down payment, right? Just like that, a lot of banks do loans and line of credits for down payment. Someone buying a $300,000 house is able to borrow 15 grand, not a huge amount of payments, but yeah, that will unfortunately be taken away as of July 1st. So that's the first one. The second one is, I think, which will have a bigger impact, is where they have changed the requirements to credit scores. Prior to July 1st, you could still buy a house with less than 20% down payment if you had a minimum credit score of 600. Now this is being increased to 680. So this is substantial because there's a significant amount of buyers in the market whose credit scores are between 650 to 680. And traditionally, anyone who has a 650 beacon score or credit score is considered good credit. So now CMHC is saying that you don't have to have good credit to get into the market. You have to have impeccable credit, right? So that, I think, will have significant impact, especially in terms of pre-approvals. Prior to this, we used to see clients just when they were about ready to purchase, right? Maybe before going into the market to start hunting for a house, let's pre-approve you. Now, we would recommend that we see our clients or your clients at least 6 months in advance. So if their beacon score is below 680, we can coach them in order to get it up to 680 in the next 3 to 4 months. It is doable, but it will require time. You have to be more prepared to get into the market now.
If there's multiple buyers, like if there's a husband and wife, does that requirement apply to both of them or one of them, or?
Yeah, that's a good question. So one of them has to have 680 plus. The other party could have below 680, but even then, that's up to adjudication at that point at CMHC to determine.
Okay, so there is a little bit of wiggle room then. They can still adjudicate those matters.
Yes, yeah, absolutely.
Okay, very cool.
If the overall file is very, very strong, right? But yeah, according to them, one of the applicant has to have 680 plus.
Okay. Okay, great. And then there's some changes to the Gds Tds as well, I was reading. Can you explain a little bit about that?
Yeah, so Gds and TDS used to be 3944, and it has now gone down to 3542. And really, what does it mean? What is 3944, 3542? What does it mean? Sounds like measurements for my jacket, right? So essentially, well, this is how banks and CMHC qualify our clients. This is the measure that they use. So the 39 GDS, which is gross debt ratio, that means that no more than 39% of your gross income is used towards your mortgage payments and HEAP payments, your property taxes. So 39% of your income is used towards you qualifying for a home. And then the 42, which is TDS, that's your total debt service ratio. So all of your liabilities, that could include credit cards, loans, line of credits. But basically what the bank is saying, that no more than 44% of your income should be going towards your debts, right? So that is now changing. That's going down. Now, it doesn't sound like a lot, right? Like GDS 39 goes to 35. It doesn't sound a lot, but let me put it into numbers for you. So someone with a gross family income of, let's say, $100,000, prior to July 1st, they could get approved for a $500,000 purchase on average. $100,000 of income will get you $500,000 of purchasing power, right? That will go down to about $440,000. So if you make $100,000, you would only be able to get a mortgage, or you'd only be able to purchase a property for up to $440,000. So there's about a 12% decrease in purchasing power as of July 1st, which I think is, it's quite sad, to be honest with you. There's no other way of putting it, right?
Mm-hmm. It makes it a little bit more difficult for somebody with that situation. Is this, Amir, something that applies to first-time home buyers or anybody with less than 20% down?
anybody with less than 20% down. And, you know, I think CMHC here has, and, you know, this is, I can talk about this for hours. And I know you want to keep this short for putting it out there, but, you know, I don't understand what CMHC has done over here. If they wanted to mitigate people taking on too much debt, or mitigate that, for example, they could have done other things, you know, increasing amortization. Why is amortization for first-time homebuyers limited at 25 years? It doesn't make sense. You're putting 20% down, you would get 30-year amortization. While first-time homebuyers that, you know, they have their whole lives ahead of them, right, are only limited to 25 years. Another thing which I don't understand is that CMHC's Evan Sedel, you know, he talked about limiting first-time homebuyers and people who put 5% down, limiting risks associated with the loss of equity in case anything happens. Well, how does this help? Right? Like, what about the hundreds and thousands of insured mortgages on their portfolio as of right now? It does absolutely nothing for them. Right? While adjudication already is extremely difficult for buyers to qualify during COVID, banks are being extra due diligent in lending money. So how does this change help that? I don't see it. I don't see the correlation. I think this is terrible timing, and I think this is being done specifically to you know, to bring down prices, which is ultimately CMHC's goal from the beginning.
Yeah, and we saw some news articles about that as well. They had a release that they were put on blast for.
Yes.
And, you know, our real estate office hasn't really seen a decline in the average sale price. In fact, our transactions have been through the roof, and our sales prices have been very, very stable. Yes, there's less inventory and less transactions happening, but overall, our outlook is pretty positive and optimistic at this time. So, Amir,
demand.
Yeah, exactly. And that's what it is. When you have supply and demand both kind of drop in tandem, prices just, you know, remain stable. Whereas when they go in different directions, prices go in different directions based on that, right?
Absolutely.
Like supply and demand. So, Amir, the requirement here, like CMHC, just so the listeners know now, CMHC, GE, you know, these sorts of insurance companies, they come into play when you have less than 20% down. Do you see, in this sort of situation where CMHC's put out these hurdles, do you see people now shifting to some of the other insurers? Or do you think that they're going to follow a similar kind of regulation?
So traditionally what happens, Ricky, is Genworth and Canada Guarantee, they do follow CMHC. CMHC is the trendsetter. They're the benchmark setters, right? So you will see the other insurers follow them. So my guess is that if they don't follow right away, they will in some time, right? Maybe they won't follow during COVID. Around this season, they may not follow through. But traditionally, that is what happens. If they don't follow through right away, yes, you're going to see a significant amount of applications going towards Genworth and Canada Guarantee. But you also have to realize that banks and their risk adjudication and their risk adjudication departments, they usually mimic the adjudication of CMHC. So even if Genworth and Canada Guarantee comes out and says, no, we're fine with our previous Gds Tds of 39.44, right? CIBC, TD, RBC, they might not want to do that. They might say that, no, we feel more comfortable lending based on what CMHC is doing. So it's going to be interesting as to what happens next. But if Genworth and Canada Guarantee do follow in the footsteps of CMHC, it won't be right away. I don't think so, because it won't make sense for them to change their adjudication strategy right away. They do have a significant amount of money on their hands to be able to insure.
Okay. Now, for somebody that's looking to, you know, make a move, I guess, quickly before the changes take into effect, when do those changes come into effect exactly? When should people be making their applications to kind of get this together?
As long as you have a signed offer to purchase by June 30th, you're fine. Your mortgage application has to go in before July 1st, and you have to have a signed purchase and sale agreement, right? Okay. And another thing is that there's a ton of your clients that have already been pre-approved probably, and you know their pre-approval says 500,000, 600,000, whatever it is, right? They will need to go and see their banks and brokers again if they don't buy by June 30th, because those numbers will now become moot.
Right. So as long as your commitment's valid and it's before that deadline, even if your closing is after the fact, you're still locked in, you're safe, you're good to go.
Absolutely. As long as you have a firm mortgage commitment from the bank and CMHC, you're fine. This will impact any new applications that go into the CMHC after July 1st or July 1st and onwards, right?
Perfect. And then the last question I have for you is if somebody needs to borrow funds from family members or loved ones or what have you, does that change anything in this situation?
Well, I mean, gifted down payment does not change. So you can still receive gifts from your family, friends. Well, they don't say friends. They say it has to be your family. So yes, gifts are fine. But if you're borrowing money, be it from a friend, be it from a loan, a line of credit, yeah, that you cannot unfortunately do anymore. Yeah, that's one of the things that is ending, at least at CMHC, right? So if that is the scenario that you're in, you may have to look at Genworth or Canada Guarantee as long as they don't make that change.
That's great news. That's, I mean, not great news, but that's great insight, rather, right? So it's really great that we're able to keep our viewers informed. And then last question before I let you go, what do you think is going to happen with the rates? Any outlook on that right now? Any insights?
I mean, we are already in a low rate environment, right? And variable side, we don't anticipate any moves. We don't see that going up anytime soon. Fixed rates have actually been coming down slowly, right? Like we're back to around, for insured mortgages, we're at like 2.19, 2.295 year fixed. Yeah. So I don't see rates going up anytime soon. But yeah, I do think this is a good time for at least first-time homebuyers. The ones that have been sitting on the fence, they need to think about moving in and buying something right away. That's what we're telling all of our clients. 12% hit to your affordability is significant. And really, like if you're going from 500 to 440, that could mean the difference between the type of property or the type of area that you're targeting, right? So again, really, we're not too concerned about prices, but just like you said, it's supply and demand, right? We don't foresee any major changes coming into affecting our market and pricing. And really because I get this question quite a bit, right? Hey, should we buy now? Should we wait for the market to change? Really doesn't matter, right? At the end of the day, you're buying this house to live in, right? Half of your mortgage payments are going into interest, but the other half is going into a forced savings, like a piggy bank. Yeah. At the end of the day, right? If you're renting, all of that money is gone.
Right.
So I think it's a good time, and people should maximize their purchasing power by getting in by June 1st or July 1st.
Yeah, I agree, and we've seen it. The people that had the equity in their homes and they needed cash injections in the last 12 weeks, it's been very helpful to have that ownership. But I think that unfortunately now with a lot of the people, they might get pushed out into that rental market, right? So it'll be interesting to see how things develop moving out from here. But we really appreciate your insight as always, and I'm really looking forward to seeing you again soon.
Thanks, Ricky. Yeah, me too. I want hopefully I'll come down to your office when everything is settles down and gets better, or maybe with a mask on. We'll see.
All right. Thank you so much, Amir. We'll talk to you soon.
Cheers. Take care.